In this part of the series, we'll be looking at forecasting revenue and expenses. When looking at forecasting revenue and expenses, we want to utilize the knowledge from the previous section, that is growth rates and forecast ratios. We'll look at how to structure an income statement from forecasted rates, and this is how to calculate revenues and expenses and how to find EBIT, so earnings before interest and taxes. Some ways to review this, and this is review. So revenue growth can be historical average, industry average, economic growth, or other. So this could be you just have knowledge is what the other could be. History could be a 7-10 year average, 5-year average. Industry would be what your industry is. So if 5% growth is in your industry, then you would use 5% growth. And economic growth runs at about 2.5%, which is the growth of the economy. So expense growth, so it's usually tied to revenue growth. So this is going to be in the form of a forecast ratio. It could also be a historical average. So like you have a historical average for cost of goods sold or some salary expenses. They could also be industry, just like revenue. Some examples of this are cost of goods, admin, equipment, and amortization and depreciation. So to construct an income statement from forecasted revenues, there's a couple things you got to understand, and that is you can only forecast for years that you can reasonably assume the rate holds true. After so long, the rate does not hold true because this can't last forever in some cases. So let's say that your industry can experience 10% growth year over year for the next 5 years. We can only assume this for so long because 10%, at 10% we would have diminishing returns at a certain point. At that point, you would just grow at economic growth or the growth of the economy. So reasonably, we assume 5 years is a good estimate for how long your growth rate will hold true. And other assumptions can be applied to this as well. Some years are going to be less, some years are going to be more. You can put that into your forecast as you construct your forecast panel, which will then feed into your income statement. And then you can calculate your future revenues and expenses. So revenues are going to be the knowledge of industry, historical, and economic rates, like we said. And then your expenses are going to be a function of a forecast ratio. This is going to be a ratio on your first year, and it is going to be a percentage of your revenue every year. So to calculate your cost of goods ratio, you would take your first year's cost of goods sold divided by your first year's revenue. And this would give you a ratio. This is going to be called your cost of goods ratio in this example. And this would be the same ratio you would use for your growth rate on revenue year over year for the 5 years. So to calculate EBIT, EBIT is all your earnings or revenue minus your operating expenses. So this includes depreciation and amortization. So EBIT stands for earnings before interest and taxes. So this is all earnings before interest and taxes. So this is going to be all your operating and operating income and expenses. So this is also known as operating income. So EBIT can later be used in valuation to give value to an investment or project. This is used to calculate the net operating profit loss adjusted for taxes, or NOPLAT. This is used to adjust for debt or leverage using operations. So when trying to construct a value for a company or a project, you want to take out the use of leverage so you can compare it to other things or unleveraged projects or businesses, because those sort of capital structures can change from project to project or business to business.
My name is Rick Haskell, and I'd like to thank you for watching this video as part of the Bill and Vieve Gore School of Business's Business Certificate Series. I'm a finance professor in the business school, where I'm also the director for the college's Center for Financial Wellness. The Business Certificate Series is offered through the center as part of our outreach through the Gore School of Business. You can follow us on social media through Westminster's Instagram, YouTube, LinkedIn, or Facebook pages. You can use the QR codes provided or simply go to these websites. Thank you.